Okay, hey everybody, Dan Fitzpatrick here at stockmarketmentor.com. I just want to take a quick look at Tesla and kind of frame a trade for you. So we don't have earnings for a while, so that's not going to be an issue. Let me get rid of this box here because I don't need it for what I'm doing here. So you can see how this stock has been just kind of grinding around here for a while, 450-ish, one way or another. But the way I look at it is really kind of forming a consolidation phase that could very well make Piper Sandler look pretty smart with a $500 price target on it. Now, on a percentage basis, it's not much to chirp about. It would have been better owning Cipher, which we have done for quite some time, like 175%, I think. But that's then we're looking at Tesla now. So this is the point that I want to make, though. You can buy this stock and right now and say, hey, I think the stock's going to move higher. And you could do that, but then it's also moved lower many times, like recently. Every, I don't know, third or fourth day it does that. So what you're doing in buying it now is pretty much a low probability trade. But let's say you say, all right, well, yeah, but I want to get a head start on it. Fine. So you're buying the stock right here. And the real breakout area would be like right here. You want to see it run up above 474, we'll say. You want to see it go above 474 before you can declare like a bona fide breakout. And so that would be about 2.5%, we'll say. So if you buy right now, you're getting a 2.5% jump, a head start on the move. But when you're doing that, you're also risking what? A pullback just even to, yes, shoot, even today's intraday low, 440.71, you're risking 4.5%. So you're risking 4.5% to get a 2.5% jump on a breakout that might or might not happen. And so the better way to trade something like this, and I'm not even really talking about Tesla here anymore, I'm just talking about stocks in general. When you're looking at something like this and you're wondering whether to get in kind of like prospectively early, I want to get an early start before the stock does X. Just be mindful that it's not obligated to do what you think it's going to do. A lot of times they don't. In fact, if a stock knew you were putting a bunch of money on something, betting that the stock would do something, it would go against you just because it doesn't like arrogance. And it would probably kick your dog too. So you can't really count on the stock to do something just because you want it to. So the better way for you to do it is always be framing your risk reward. If I get in early, I have to assume that this next high here, that this is resistance. You can't just assume, well, this is just going to blast through here and keep going. If you're going to make that assumption, then you just got to go all in. It's not going to happen, but you got to go all in. But what I'm saying is you have to look and see where is the next level of resistance that's meaningful. And that is this high here, 2.5% higher, that you need to see the stock break through. So the 2.5% move is valid, but like the 3 or 4% or 5% move to the downside is also valid. That's a crappy risk reward. So the best way to trade it is to say, you know what? I'll let somebody else get an early jump on this. I'm going to wait for the breakout, and only then will I consider buying. And in the meantime, I'm probably just going to go find some stocks that are doing really well, like Cipher, like Iron, which we're very long right now. So anyway, that's all I got for you. Look, I hope that you are a member of Stock Market Mentor. And if you're not, why don't you go fix that right now? $7 gets you 14 days. If you can't make money, if you can't make that money back in 14 days, then you need to sit at your computer longer. All right, I'll see you then.